FX Nation, what's up guys? Welcome back to the channel. Welcome back to another video. I wanted to talk to you guys about the Forex market cycles. Let's go ahead and let's take a quick look at pound USD and let's break down an entire week, beginning of the week here. All right, so beginning of the week, Sunday going into the Sunday, Monday. All right, I know that a lot of you, a lot of retail traders, to be honest with you, are like, you know, at 5:30 on Sunday Eastern time, they're like already like looking at the charts, trying to get into a trade, which I really don't understand. What you need to do is you need to take the first day of the week, and you should actually take it as a day of collecting data. That way you can better understand what is going on and what they're trying to do. So if we just take a look at the previous week, essentially what did we have? We started out with a accumulation cycle because essentially we had price moving essentially between, you know, support and resistance, and then they essentially moved away from that during the Asian range, Wednesday going into Thursday, and they turned it into the last 2 days basically into a trending cycle. This essentially happens whenever they're trying to set up basically for the following week. So this behavior here that you see, these 2 days of rise, is on purpose so they can essentially set up for the following week. Let's play this out here so we can get an understanding of what we're talking about here. So again, this is Sunday, Monday, and so a lot of you may be looking to potentially trade on Sunday, Monday, and I would tell you, why don't you use Sunday, Monday as a day to collect data instead, so you can better understand what they're trying to do for the rest of the week. So right now, as you can see, 77 pip Asian range. Nothing, you know, really happening right now, obviously. So if we play this out, we're going to notice price rockets straight up, right? So it goes straight up. So this is basically their false move, right? That's made right after Asia going into the London session. All right. So now it's all about, all right, well, they made a false move. So what's the only possible trade setup that you can get from this that we normally like to trade, if you trade like how we trade? And by the way, if you're new to the channel, if you don't know how we trade or anything like that, go to our playlist and check out the playlist, Trading with Market Makers. It has absolutely everything that you need to know about how we trade, the exact strategy, for free. The only trade possibility that we can get out of this is a type 1 based on what we're looking at right now, right? So essentially, what are our qualifications to look for, you know, a possible entry right now? If you think about it, the way that this aggressive move happened causes one of our entry triggers to be separated from each other, meaning the 5 and 13. Right, so it makes it pretty difficult to get into a trade potentially that we can really get into with any kind of high risk to reward ratio when the EMAs of 5 and 13 are separated like this. So you have to wait for this to come back together, right? The 5 and 13, which is what it's doing here. If you are an aggressive trader, you're basically trading when, you know, when you get a candle that closes below the 13. I would tell you to essentially wait for a pullback at least after that so you can get a better entry. Let's see if on this particular candle you get an entry on the next candle here on a pullback. And really the pullback is what you would really like to see, is a pullback, maybe half of that candle there, so at least you can use a tighter stop loss, right? Because there's no way you're going to use a 74 pip stop loss. That doesn't make any sense, right? And so this is what I'm talking about, where, you know, these type of trades like this, they don't make any sense. All right, if you follow our entry rule triggers down here, even if you just go above this candle, you're still at about 19 pips, right? 20 pips or so. So why don't you wait for a pullback and see if you get an entry? So you see you had that first pullback there. You see almost it went back half the candle there. So that would be a good pullback there. All right. So what's your target, right? Ideally, your target would be 30 pips to get to 2-to-1 risk to reward ratio. And you always want to target 2-to-1 risk to reward ratio, because that's always going to be the best possible target for you, is to get a 2-to-1. Because if you can't get a 2-to-1 risk to reward ratio, essentially you're putting yourself at a big disadvantage when you go on, if you go on a losing streak. Okay. So when you always select to have a trade setup that gives you potentially a 2-to-1 risk reward ratio, everything is in essentially your favor. Even if you lose trades, 3 trades in a row out of 5, you're still up. But here we go with this particular trade, right? It meets the criteria. It's in the box, second leg. You actually don't even get a second leg actually here. It's just a straight move down. Okay. And so these kind of trades I really don't like to trade, because I always like to trade a second leg that comes up. But you're not going to get that kind of behavior right now, because we're already pretty close to the 50 EMA. If the EMA is below you like it is now, you could basically use that to as possibly one of your take profits, or maybe even the middle of the range here. If it goes below that, then you're looking at these lines here, which is previous week's high, and then down here is yesterday's low. But for right now, to get you 42 pips, a 2-to-1 risk to reward ratio, that would be essentially the trade if you're an aggressive trader. If you're not an aggressive trader and you're a more conservative trader, then you're actually waiting for a crossover, the 5 and 13, to happen, and then a pullback after that. If you took that trade there, you would have gotten basically 42 pips on that particular trade there, like that. All right. So that's just one trade. And this, again, if you trade Sunday, Monday. Okay. I personally would tell you not to trade Sunday, Monday. Wait it out. Get the data first so you can at least know what's going on. Because the retail traders out there that are like literally trading every day, okay, are the ones that are blowing accounts, are the ones that don't have a trading plan. They don't understand how this works, really how this works, and they're not consistent. Okay, because if you were consistent enough, you would know that Sunday, Monday is a day that's used for collecting data. Okay, so let's play the rest of this day out here, and let's see what happens throughout this US session here. So on the US session here, you see basically you get a potential reversal here, basically from the low of what happened during London. It goes back up, and it just basically does nothing, moves sideways, right? So let's go on to Tuesday. And Tuesday, I think, is a major key to essentially helping you identify what kind of a cycle you're in. Because if you know what kind of cycle you're in, basically you can predict what's going to happen the rest of the week. The problem with just trying to trade with levels is the fact that you don't know how long that level is going to be held for, because you don't know their numbers. You don't know how many contracts they need to collect before they move down to another level. So if you look at pound USD, the month of April, it basically went straight sideways for how many weeks? 3-4 weeks. Okay, so you could have been holding on to that level, waiting for something to happen, and nothing happened. So your money is basically just stuck, doing nothing. You know. So on this Asian range, okay, let's see, 66 pip Asian range. So as we continue to go along and play this out, so far, what has happened? All right, you basically have the 200 EMA going straight through price. You have the 50 right above it. So basically, you're in a situation where price is essentially being squeezed by the 2 EMAs, like that, right? So knowing this behavior, I know that it's very likely that I'm not going to get price to come up to the very top here, because I've seen this over and over and over and over again. Okay, so because of that behavior that I have seen before, I know that it's very likely that this is not going to go above to the top here, to the top of the range, to basically give me like a type 2 setup that I can take to trade. Okay, and really what I would be looking for right now is something to happen to break out of this squeeze, all right, and then be able to take a trade. Now, knowing that I'm not going to be able to get a type 2 setup out of this because of the 50 and the 200 squeezing price through, I'm essentially only left with one option, and that's essentially a type 3 setup. Okay, and that's basically trading it from the middle of the range, and also where that middle of the range right now is also the previous week's high as well. So you have a couple of things going on here. You have the 200 going straight through the middle. You're at already previous week's high. You have the 50 above you holding, squeezing price down against you. So essentially all I'm looking for is really a break that breaks below this to allow me to get into a trade. Because in this scenario, you're really not going to have like crossovers and stuff for the 5 and 13, because the 5 and 13 are right there literally. So that's not something that's going to happen. Okay, and you can see by the behavior here that happened Sunday, Monday, this potentially could be the peak formation high. This right here could be the peak formation high. So if that's going to be the case, which I don't know if it is or not, but if that's going to be the case, then we would want to be looking for sells, and that would make sense with the actual price action that we're actually getting right now. Okay, so let's see what happens here. You can see it's just moving sideways. It's just moving sideways, not doing anything, being squeezed out. And then if you bring in the TDI here, you can see you're basically just moving along the 50, so that's nothing helpful there. Boom, right there. You see that candle close like that? Now that candle closing like that is huge. Right there, see? See how now it's moving below that, or basically trying to move below this this area or this zone where it's been at for, I don't know, what, an hour and a half, 2 hours almost? Okay, that right there is essentially telling you that price is starting to move past this. All right, so what would be essentially a setup that you could potentially take for this? If you just hold it above the 50 EMA here, all right, to use the 50 like as a barrier, let's say, then you're looking at, you know, 21 pip stop loss. All right, and then if we take this down, where could we take this to? Well, the first, you know, logical place that you could take it to really would be the 800, because that's the only thing that'll give you any kind of actual trade setup, right? So it's all the way down here. If you just take it to the bottom of the range, it doesn't make sense for you to take this trade because you're only at a 1-to-1 risk to reward ratio. That doesn't make sense. If you're looking for sells, okay, if you're looking for sells, you should be trying to target the next EMA, which is at 800. Okay, and so even if, let's say, this goes down to here and it stops here, you're already in profit anyways. And if you see price stop at the bottom of the range here, then you could just exit the trade. It's not that big of a deal. Let's see how this works out. And let's see if we can first make it here, and then obviously the target, the original target would be down here. That'd be 86 pips. And that's almost that's a 4-to-1 risk to reward ratio. That's a really good risk to reward ratio. So pretty much, wow. So pretty much took all day to get you from here all the way down, and it went further way down too. So how far did it go here? All right, so it keeps going down, right? So your trade to your original take profit was already done, and it's still going down. All right, so a couple things that happened. All right, so remember that the initial, you know, zone for Sunday, Monday is right here. So notice how Tuesday we basically went down the entire day, and we broke the low of Sunday, Monday. So by breaking the low of Sunday, Monday and going down straight in one direction, that automatically disqualifies this week as being an accumulation week, right? Because accumulation of a cycle is basically doing this, moving sideways between support and resistance. Obviously, that can't happen if we just broke the low of Sunday, Monday. So now that we know that, that only basically leaves us two options. Either it's going to be a market maker cycle or it's going to be a trending cycle. We'll get basically our answer on which of the two it's going to be on Wednesday, because if it's a market maker cycle, we expect a certain behavior to happen on Wednesday. So let's go on to Wednesday and let's take a look. All right, so a couple things to notice. We're going into Wednesday. What is this? A 36 pip Asian range. The 200 is above us. The 800 is above us. And the 50, of course, is now riding through price. Let's see what we get. If we get possibly, let's say, a type 1 setup. Okay. Or if this moves sideways like this in that range the whole day. Okay. We could be setting up for, let's say, a Thursday midweek reversal to go back up, and that would be a market maker cycle. But on Wednesday here, if we don't get that kind of behavior, and let's say we get a move where we possibly pin either the 800 or even pin the 200 here, we may get a move that's basically like this going down. And then that would tell us automatically that we're going to be in what? In a trending cycle, because all we're doing is we're trending. We're creating what? Lower highs, lower lows, right? We're just creating that. That's all we're doing, is creating that. Let's go ahead and let's take a look and see what happens. What kind of behavior do we get that day? So I'm going to assume 3 o'clock. This is probably news. That's probably a news candle there, right? So keep going. There's nothing here to trade, by the way. All right, so now we get into an interesting scenario, essentially, because we basically had a really big spike down that probably happened for news, I don't know. But then we had a push all the way back up. And this push all the way back up, what? It went all the way back up to the 200. Right? So if this behavior continues like this, we know that we're definitely in a trending cycle. And if we're in a trending cycle, what are you looking for the rest of the week? If you're in a trending cycle, what are you looking for the rest of the week? You're looking for sells. If you're an aggressive trader, this hasn't closed below the 13 yet. It's a tiny little bit right there above it, or right on it. So there you go. So that would be a candle if you're an aggressive trader, right, to get into a possible trade there. If you go just right above to that candle, it's about an 18 pip stop. And then where would you take it to? I mean, the first obvious place for me would be yesterday's low here, because that's an easy 2-to-1, well over 2-to-1 target. The only thing that I don't like is really the timing aspect of it. It's very late into the London session. And so the behavior that I know that I've seen over and over and over again is right when you get into a trade like this, the hours from 7 to 8, okay, typically includes some type of a sideways movement, or even sometimes a pullback that happens during that hour. So if any of those two things happen, basically you're just holding a trade for nothing, because if you hold it and you get a pullback, it takes you out because your stop loss is so close. If it goes sideways, then essentially you'll probably be taken out by the 6 candle rule. because the next candle would be your entry candle, which would be this one here, and then another hour, that's 4 more candles. So you're probably going to run into a situation where yeah, it'll be like a 6 candle rule. So if you get into this as an aggressive trader, you have to keep that in mind, that there's a possibility that this could move back or could just move sideways. So if you were to take this like this would be essentially the setup. So you'd have been taken out. You see what I mean? You see how that hour goes down, then comes right back up like that? So you would have been taken out. That's why I don't like taking those trades right at the edge there of the box. So let's keep playing this and let's see what happens. All right, so now what do you see? Do you see how price is basically riding on top of the 800? So essentially you have very good idea of what behaviors you're seeing, where the 200 here is like a blocker, and then also this right now, this 800 is basically blocking price as well. What is it that you would be looking for essentially to get into a sell? Can you get a candle that shows any kind of actual movement that wants to get away from this high price action here? Do you see that candle, how that candle basically almost took up 2 of the previous candles like that? You see that? That right there is your move. That's the behavior that you're looking for. So what do you do with this? So the trade setup, this candle closes below the 13, which is good. So where can you take this? Essentially, you're still taking it basically to the bottom of yesterday's low. That just makes sense. All right. Now, I do have, if this is going to go down in a trending cycle, then this right here still, could be a possibility. Who knows? Right? But we're playing it on a simple basis here. All right. So if you lower your stop loss down, let's say to about 19 pips or so, and you just leave it right above this 800, okay, you get a 2.5 to 1 risk to reward ratio. All right, you still get about 51 pips out of it, and you're going with the cycle trend on this particular day. So let's see what happens. So it kept going all the way down to 124 pips. There's another trade there. So you lost this one if you entered it, but you won on this one. And now you could basically see all it was a big multi-session M. So that's Wednesday. So let's go to Thursday and let's see what that cycle looks like. What are we looking for on Thursday? We're looking for what? Sells, right? You're in a trending cycle, so you continue to look for sells. That right there, do you see that? Do you see how it went up, went to the bottom, went up, tagged the 50 in the middle of the range, and then basically immediately got rejected? That right there is a behavior, that's a type 3 setup there. So would you take this potential trade here with 30 pips? 30 pips as a stop loss. That's not really a doable stop loss on that. That's too big of a candle, right? So what does the next candle do? Next candle goes lower, and it basically pins this bottom here. Okay, now you could do a couple things. You could get into this trade and basically have a 15 pip stop loss. And if you're wrong about this, you're wrong and it takes you out right away. Probably in the next candle it'll take you out. Okay? But if you're confident in what you're doing because you've seen this over and over and over again, and you've back tested and you understand the behavior that's going on and where you are in the cycle for that week, a simple trade essentially that goes from here to the previous week's low. All right, it's a 52 pip trade, and if you're right, this is going to hit pretty easy. If you're wrong, it's going to take you out, and that's it, and you're out of the trade within the next candle or so. So let's see what happens. And look, it even keeps going down. So you could even go further if you're paying attention to this. You can keep going further down if you want to. You can turn a single into like a triple or home run, So this keeps going down I mean, this is ridiculous. Look at that. This could have easily been turned into a home run. Listen, if you get out on this like this on 53 pips and you leave all this on the table, you can't be upset about it because you followed the plan. You followed your plan. And so if you weren't, let's say, available for this, if you weren't watching this and you had your take profit here and it took your take profit, great. Don't be mad about the fact that you miss all of this. This is not something that is not going to happen again. So don't have the mentality of a retail trader of like, hey, this is basically going to, I just missed out on this 250 something pip, trade. Your mentality should be like, hey, you know what? I wasn't paying attention to it. I got my take profit. I still got 53 pips. So what? We'll catch it next time. Not a big deal. Because if you're trying to do this for a long time, consistently a long time, one trade isn't going to make or break you. So let's move on to Friday. Friday, same thing. We're in a trending cycle. A couple things about Friday is I don't like trading a lot of Fridays because basically they use that day for nothing, for moving, potentially sideways or setting up again for the next week's cycle. So the only way to trade Friday for me is that thing better be having a very good and perfect trade setup. And if it's not perfect, then I just won't take it, right? So again, still trending cycle. You're looking for sells still, but you know that there's a possibility that it could just move sideways and not give you anything. So let's see essentially what it does give us, if anything. So you see how it keeps moving up, moving up here like it is now. You know that the only possibility that you have is a type 1 setup. There's no other option right now for you to take besides that. So that's what you're looking for, essentially. So you're just waiting for your entry triggers to happen, which hasn't happened yet. Right there. There's your entry trigger. Right there. If you're an aggressive trader, there's a close below the 13, and you're kind of in the same situation that you were over here, where you're basically taking it super late into the session and you could get stopped out. So then the question becomes, do you take the trade or do you just not worry about trading that day? Okay? Because literally this is about to be the last candle. So potentially, what does that look like? It's a 35 pip candle almost. So you're needing a 35 pip stop loss. All right, 35 pip stop loss. Does it make sense to take a 35 pip stop loss? No, it doesn't. The only real way that you can take this is if you get a pullback on the next candle that comes back at least maybe half of that candle. So now instead of being, let's say, a 35 pip stop loss, now it's actually a 21.20 stop loss. That makes a lot more sense. You know what I mean? That makes a lot more sense. And so where do you possibly take this to? Same thing, go down to at least 2 to 1. 2 to 1 is basically this, the middle of the range. I mean, so you're not asking for a lot. You're just asking to go to the middle of the range. Okay? So first, let's see if we get a pullback on the next candle. Yeah, there you go. There's your pullback that happened at the very beginning of the candle. You see that? Let me move this out the way. There's your pullback there. So that would have been your entry right there on that pullback. So now it's all about, can you just get literally to the middle of the range? That'll be 46 pips and a 2 to 1 risk to reward ratio. Boom. There you go. That's it. You're done trading for the week. Good night. Go to bed, right? If you're paying attention to this, like I would think you are, because at this time, if you're taking a trade, obviously you're paying attention to possibly getting that swing back like I talked about from 7 to 8. Or that move sideways that happens a lot of times as well. So in this case, you didn't get that move sideways or the move push up. So this turned out to be a decent trade for you. But the important factor is that you waited for better entry with that pullback, because it wouldn't make sense for you to enter a trade. I don't care if it worked out in your favor or not. It just wouldn't make sense for your plan to take a 35 pip stop loss on a trade. It just doesn't make sense. So that would have been the trade. This keeps going. So if you're paying attention to this, you could keep this going if you want to. You can keep it going as long as you want. Basically, follow the 5 EMA and get out when price closes back over the 5 EMA. Look at that. So right here, this candle here, you would have gotten out at. So essentially, you're looking at 72 pips. So instead of like 40, you get 72. Okay. So not a bad day at all. Not a bad week, right? You take one loss here. If you're an aggressive trader, you took one loss here. You got stopped out. But I mean, essentially, you see that there's on this, knowing that you're in a trending cycle, you know your bias, and essentially now it's just all about pulling the trigger on the behaviors that you know and expect to see, basically, with market makers. Now, how do you know the behaviors that you get to see and stuff like that? That only comes through backtesting. I'm sorry. So if you haven't done any backtesting or anything like that, you have to do backtesting to understand and get to know the behaviors that happen over and over and over again. If you've never done backtesting, there's also a video in our playlist about backtesting. All right. So that's a full week. And so this is what I'm talking about when you know what cycle you're doing, what cycle is happening for the week, whether it's a trending cycle, a market maker cycle, or an accumulation cycle. You can pretty much predict the bias for the next day. And depending on what you get during the Asian range and the price action that you get during London, you can predict what kind of setups you're going to get for that day. All right. So guys, I hope that you enjoyed this video as much as I enjoyed making it for you. Please, if you like this content, please like and share the content, guys. Again, thank you for your support, and have a great night. Guys, if you need any more help or you like the content that we provide on this channel, come on over to the FXN Masterclass. It's available right now. What you get essentially is a lifetime membership, a full mentoring course, an advanced course. You get the Blue Summit videos, weekly Q&A sessions every Sunday, group session archives, which that by alone has about 100 hours of content, weekly analysis videos, midweek analysis videos, MT4 and MT5 indicators, a customized trading journal so you could actually journal your trades every day, and then a backtesting journal that you can use to backtest and collect all of your data. Not to mention a mentoring private chat, guys. So all the information is in the link in the description if you want to join now. We look forward to seeing you there, guys, and take care of yourselves.